Now, Nigeria's economy has slipped into its second recession in 5 years as the gross domestic product contracted for the second consecutive quarter. The National Bureau of Statistics earlier announced this on Saturday as the nation's GDP contracted by 3.62% in the third quarter of this year. Now, this follows an earlier contraction of 6.10% contraction in the second quarter of the year. It is the nation's second recession since 2016 and the worst economic decline in almost 4 decades. Now, the Nigerian economy has been battered by the coronavirus pandemic, which caused a significant decline in all revenues as global economic activities also stalled for months. Now, the average daily oil production recorded in the third quarter of the year stood at 1.67 million barrels per day, and the non-oil sector also contracted by 2.51% in real terms during the reference quarter, which is about a negative of 4.36% points lower than the rate recorded in the third quarter of 2019, but 3.54% points higher than in the second quarter of 2020. The non-oil sector was driven largely by information and communication, with other drivers being agriculture, looking at crop production, construction, financial and insurance, and also public administration. In real terms as well, the non-oil sector contributed 91.27% to the nation's GDP in the third quarter of this year, higher than its share in the third quarter of last year, and also the second quarter of 2020, which was also pegged at 91.07%. Well, joining me now live in our Lagos studio, I have with me Olatunji Arowolo, the Chief Lecturer, Department of Mathematics, Lagos State Polytechnic, and the National Secretary of the Nigerian Statistical Association. Good to have you on the breakfast show today.
Yeah, good morning.
Now, let's start off with this. This contraction did not come as a surprise to so many economic watchers, but with this dip, were you expecting this as our biggest recession so far in over 33 years?
Well, I will say yes. And looking at the last report by the National Bureau of Statistics, because the indicator has been there, and just confirmed by this, the recent release by National Bureau of Statistics. Apart from what is expected due to coronavirus, lockdown, there have not been production, people have been losing their job. Government policy has not even helped matters. Even if it is going to contract, maybe it won't be as deep as we are having presently. You can imagine when the rate of unemployment is increasing, people are losing their job. It's at this point in time that the government now deem it fit to increase the pump price, and also increase taxes, which is going to have negative effect on people.
And even the tariff regime for electricity.
Regime. Yes, a tariff regime, because it's going to affect production. And all this will be plunged onto the consumers.
It's just a cyclical trend where we pass the effect. But now let's also talk about some of the cautions we've had from the World Bank as well as the International Monetary Fund. The IMF earlier in its report said, well, it expects Nigeria to record about 4.3% contraction level. The World Bank was pegging it at about 3.2%. Now, this contraction report we are having from the National Bureau of Statistics is somewhere midway. Now, how do we develop or aggressively now focus on recovery, talking about stimulants, fiscal and monetary stimulants? Talk is cheap, but now it's an expensive route. How do we navigate through all of these?
Well, the government has to go through the unconventional means of trying to stimulate the economy. It's not just by way of providing money for the manufacturers. They have to look for ways to create employment, real employment that is going to be massive, because if there is no, even if there is production and there is no money to consume, it will still boil down to the same effect that we're talking about. So the producers are going to lease. So they have to reduce their lending rate. That means if I borrow money to produce, definitely I'm going to employ. I'll create job. So the interest rate has to be drastically reduced. So, and apart from that too, we have to look at most of our agricultural products. We have to look into non-oil sector, because we have depended on oil for so long as our major earnings. So they have to look at other windows where we can create an alternative from oil. And we have to look at how to balance our trade. That is what we import compared to what we export. Again, to me, the government might say they have a reason why they have closed the border. But this is also having a toll effect on the economy, because some people, that's their means of livelihood. And you talk about, presently I learned that they ban importation on dairy products. But what other substitute do we have here? And you find that we have companies that have employed people in this sector. So, and they have been retrenching their staff. I just don't want to mention the name of the company on here. At least for this year, about twice, they have retrenched about 60% of their workers.
Okay, let's talk about the contraction level we've also seen in terms of oil production and as well as the demand in the oil market. The volatility has largely hit Nigeria badly. And at this point in time, too, we're also seeing quite a strong decline in terms of non-oil sector. But we've seen some drivers. Information, communication technology. We've also seen agriculture, construction, financial and insurance sector as well having a slight boost irrespective of the decline we've seen so far. What sort of investment plan do you think we should have with these sectors to drive any form of recovery if we're going to have?
Well, it is expected when you're talking about the communication, because we found that during the lockdown, that was the only means people resorted to, even to communicate, to do education. So the boost is expected. And for agriculture too, you might say, okay, the effect of the border closure too also assisted in a way.
But there was flooding, there was the lockdown and a whole lot more, which affected the agricultural sector.
It affected at the beginning because of the restriction on movement of people. By the time when there was ease down, but you found that people started moving. And
then the protest and the aftermath also came into again.
So the protest again too, it's just that government is not sensitive. National Bureau of Statistics has earlier released a data.
Olatunji, let's talk about the investment plan now. What volume of investment do you expect within these sectors from the government at this point in time?
Well, they have to invest in the industries, the manufacturing sector, so that they can expand their production base. And for them to expand their production base, they need to employ more people. And they should give them single-digit interest, not very low interest that will encourage investor. And so that, because if investor comes and there's no people to buy, then it's a problem. So they really need to invest and create more jobs.
Let's also now talk about liquidity as well within the system and the stance of banks at this point in time. We had some cautions earlier on that banks were not necessarily in the best of shape to increase lending. Do you think as part of the monetary stimulus that would see that the MPC might now help in terms of increasing lending to the real sector of the economy? They've already helped to a certain regard, looking at the liquidity ratio and then as well as the and other aspects of the economy, just trying to support businesses. But at this point in time, do you think banks can still sustain that threshold of increased lending?
Well,
especially with what you're saying, almost at 0% interest rates.
Yes, the effect is why banks are afraid is because one of the effects of this recession is that people who borrow might not be able to pay back, and it will lead to bankruptcy. And I think that's why the banks are taking caution. And that's why the government has to do a lot more, build an enabling environment, so that this trust can come up again. Otherwise, the banks will not be able to. Because if I borrow you money and I can't pay back, it's going to affect my business.
Okay, wrapping up our conversation at this point in time, looking at the contraction in the oil sector. From the body language of government, we still see that grip on revenue from the oil sector. We are having dwindling reserves just because of the fact that we cannot even manage the shocks and the volatility we have in the market. But in terms of product diversification, do you think the body language of government at this point in time understands the need to diversify the base? The economy is already diversified, but do you think the government is really ready to tilt away from oil sector? Because we still have a strong grip and expect that is our major source of foreign exchange.
Yes, because it's our major source of foreign exchange, that's why they are still holding grip, because that's the only essence. But if really they are serious about it, they have to deregulate, hands off. But you find that when you are answering off, this is what even the majority of us, even as an individual, will depend on oil as well. So it's something that cut across all our daily spheres of life, production, even feeding at home. But if government can't deregulate, it's going to, yes, we'll feel the pain now. And I think that's what the IMF and World Bank are even suggesting, that they should not subsidize again. And that's what the present government say they are subsidizing. But they have to look at a way to balance this. It's a way of give and take. Because if they fully deregulate, it's going to affect the masses a lot.
Now, we have some indices that are staring us right in the face. We look at unemployment rates skyrocketing. We are looking at inflation, 14.23%. We are looking at GDP contraction now. Our population growth rate is quite moving at a faster pace than what we are having in terms of the GDP growth. Now, how are we expected to really bounce back? You know, initially with the economic meltdown, generally there were forecasts, and the central banks across the globe were making forecasts of a U recovery, a V recovery, and a whole lot more. Now, what sort of recovery pattern do you forecast for Nigeria, going by these indices I've mentioned at this point in time?
Yes, it's, well, anytime you say you want to recover, it has to be either, because if you are saying V, there's something, that means it's something.
That's a sharp drop, and then a sharp spike back up.
And that's like a magic. it's like performing a magic. But I don't know. But ideally, when you're talking of recession recovery, it's usually from a U shape. And that's something that is planned for, is gradual.
Okay.
So, but if you are talking of a V shape, it's like a magic. And do we have the resources?
Well,
we don't have.
We barely have any resource at this point in time to explore, but whatever we have on ground, it's time to make the best out of it, especially looking at the fact that we still have increased borrowing across board. That's not necessarily one of the most sustainable plans, especially when in recession. But hopefully, government takes a couple of cues. All of the economic advisory team also come together to ensure that we have all of the necessary stimulants to boost the economy. Thank you very much for being on the show today. Olatunji Arewolo, it's been a pleasure.
Thank you.